Welcome back to the Trading Desk. When we wrapped up the last segment, we were talking about where we are in the market. And I think we would all agree right now we're at a pretty critical phase. We have been building up to this for the last few months, and we've been warning of, hey, prices are getting toppy, but we never committed to it because as traders, you don't want to try to pick tops and pick bottoms. But I think there's some pretty solid evidence now in place that we're probably going lower.
I think there's some key numbers on the S&P. If we close under 1,000, that's another red flag. Mm-hmm. Again, all these things aren't there yet, but the trend is still up. But you have to respect the trend always.
But it's been violated to some degree.
But again, that 10-12 that we were just talking about hasn't broken. I'd like to see really 980 before I'd say yes, all rallies need to be sold. But you've also got retail showing some weakness.
Sure.
Markets selling on good news. Look at Apple's come off 20%. Amazon's come off 10 from its awesome earnings, which again everything anticipated into that. So these
and
things
there was only a few
it.
companies that actually did well after their earnings. I think Goldman was one, I think Apple was one.
I was looking. There's a local company. I think they're local. I think they're out of Oregon. Lithium Auto.
Sure. The Auto Group.
Auto Group.
Yeah.
It's publicly traded. It's LAD. If you bring up, I think we should have shown that chart because it's good. It went from nothing, I think it was about $1 to 16. And now, right now, today, and this is after the cash for clunkers, it's trading around $7.
Sure.
So I think the reality, the market always knows looking forward, and nobody's talking about, as you suggested, Jesse, a possible double dip.
Right.
Worst case.
I think there were, it's almost a given that we have to have a double dip recession. I mean, this last GDP number, we grew 3%, but there was it was so much, government spending that grew, cash for clunkers, all these things that actually created all of the growth and then some.
Right.
So we would have, still been in recession without that.
Right.
So I think, whether we, have another double dip, it all depends on if the government's going to, create another huge stimulus package, another cash for clunkers, but how long can they do that and prop up the economy? There's so much underlying weakness in the economy right now. Right.
Well,
we had the biggest bubble in the history of mankind. The real estate bubble burst. Yeah. You don't just fix that right away. You have a recession and then it's fixed.
Well, they're extending the home, the first home buyer credit again, so that's another little juice, another little injection, trying to get those that haven't been suckered into the game. Isn't that interesting? I think to note that only first-time home buyers are getting this opportunity because most of these other people who bought in the last decade are bagged.
Sure.
Mm-hmm. So we got to get new buyers who haven't bought before, which is similar to all bubbles. It happened in the NASDAQ bubble. It happened in the real estate bubble. We're trying to do it again, and I just don't think it's going to happen.
Well, it's funny you're talking about bubbles. I think, I don't know if you read Rubini's piece this morning. It was yesterday in the Financial Times. He's talking about the next bubble, which is the carry trade. Mm-hmm. Everybody's short dollars.
Right.
Putting their money elsewhere. They short the dollar, take that money, go put it in New Zealand dollars or wherever the case may be. Right. And they said if risk assets like equities and bonds continue to sell off in gold, what's that going to do? It's going to drive the value of the dollar back up and put everything back down. Yep. And he's thinking that is the next bubble.
Not at all to toot my own horn, but last show I did commit. I said I want to be short stocks and long dollars here. And so, it was pretty obvious. I mean, we're getting to the point where the market kept ticking higher. Small cap stocks weren't confirming. Transports weren't confirming. Momentum, none of the indicators were confirming. It was basically just people buying, on that tail end of the, last kind of
and sentiment was
gush of momentum.
Very, very high.
And again, we'll go back to the big macro. There still are no jobs, and the job situation is getting worse.
The last 10 years, there has been no new job creation, net. Same with the equity markets.
It's not the normal, and it's not the normal cycle you saw in the 70s. Oh, we're having a downdraft.
We were talking before the show. This is the biggest decline in earnings in the S&P 500 in history. This is bigger than the Great Depression. Right. Earnings have declined more in this recession than they did in the Great Depression. Well, you can't expect this to be a just run-of-the-mill recession. I mean, we see it.
Well, here's a perfect example. I was talking to a source here locally who told me that the charity care at the St. Charles Hospital in 2005 and 6 normalized was around 5 or 6%. Mm-hmm. Today, that sits at around 35, 40%. So, I mean, that's a good indication of what's going. Again, that's to me that's a real number because people are still needing care, but aren't paying for it, and it's not even coming from the government right now. So,
I think bottom line, how this translates to your average investor is if you are long stocks right now, you put more money in the stock market over the last 6 months, and you feel like you have a little more exposure than you're comfortable with. Don't hesitate to sell a little bit of that. We've had one of the biggest rallies ever in history,
almost nearly 70%.
And stocks are once again overvalued.
Right.
I mean, by any measure, on price to earnings ratio.
By the
Stocks are
value, Warren
overvalued
Buffett
again.
models,
Exactly.
Graham
so
models.
if you're not
Absolutely.
comfortable, I mean, if you own a little bit too much, it's a great time to scale back.
Well,
and
like
sell
they
some
say,
of
you
that.
never go broke taking a profit.
Right.
And you don't want to
Exactly.
use that too liberally, but it's a
Right.
good thing to keep in mind.
Hey.
And I guess if you're, if you're maybe a little bit more adventurous, and want to maybe get short, use something like SDS, which is the ETF that will appreciate in value as the price of the stocks go down, specifically
And it
the
can
S&P
hedge
500.
your other
You
things
could
that you
hedge your
own.
other
So if
long
those go down,
portfolio.
the value of SDS will go up. So.
Exactly. We got to take another break, but when we come back, we're going to have an interview with local doctor Ed Boyle. He's going to talk about his company. Matt Davey will be doing that interview. You're watching COTV, Channel 11.